Good morning, everybody. Welcome to another Market Report brought to you by Mike Bjork. Today is Thursday, and it's June 7th or 16th, rather, a day after the Fed Day. Hey, we'll jump right into it because we got a lot of economic news releases, as you can see here. We'll start off with the weekly jobless claims we have every Thursday. So last week we had 264,000 people apply for unemployment. Forecast for this week was at 270,000, and they actually exceeded that 277,000. So obviously not good news right there that more people applying for unemployment. Now for the consumer inflationary numbers, we got the CPI, or also known as Consumer Price Index, for the month of May. So in April, we had a pretty big jump at 0.4%. In May, the forecast was supposed to be at 0.3%, and it dropped 0.2%. And then if you strip out the food and energy, we get what they call a core CPI, and this is really what the Fed looks at as a better gauge for inflation data. So we have a 0.2% in the month of April. Forecast is at 0.2%, and it came in expectations. Philadelphia or Philly Fed for the month of June. This is manufacturing in the Philadelphia region. If you recall, we saw this week Empire State Index went from negative to positive, and it looks like that we're seeing the same thing for the Philadelphia region as well. So this is manufacturing in the Philadelphia region. So we went from a negative 1.8 on their index in month of May. Forecast supposed to be at 0, basically just break even, and it came in at 4.7. So good news on manufacturing and wholesales, or the inflation still keeping pretty tame right now. And then home builders. So on the index, we have anything above 50 is considered expansion. Anything below, again, on this index is contraction. And we had 58 in the month of May for home builders index. This is kind of gauges their confidence level between all the different home builders out there. And the forecast is supposed to go up a little bit to 59, and it came up to 60. So we'll probably see a lot more construction or permits and that coming up, but we'll want to see when those reports come up. So overall, pretty good news. The only bad news really is the weekly jobless claims. Came in a little disappointing at more people applying for unemployment. Stock market's down. A lot of it is stemming from the Brexit concerns. Again, now that the Fed has already came by and made their decision, which we'll comment here in a little bit. The Brexit is now on everybody's minds, and it's creating a lot of concerns and a lot of anxiety in the equity markets. A lot of it due to what a lot of the Feds have been saying. So the Fed, the Bank of England, Bank of Japan, they all stood pat. No change in rates, no quantitative easing on those who are doing it. Basically, they're standing pat because they're kind of waiting and seeing about the results of the Brexit, because there's a lot of concern as to how that's going to play out, that they think this could potentially hurt global economic growth if England does pull away. So this is overall kind of creating a lot of international havoc right now, and a lot of people are kind of watching this. Yesterday's news on the Fed meeting, as we kind of mentioned, was a very dovish tone. Before, just the meeting before, everything was getting pretty rosy. Everything was looking pretty bright. They're going to be raising rates. And now it came out pretty dovish, saying that it's probably not going to raise rates as much as they initially thought. There's concerns about global economic growth, the Brexit coming in next week, and how that's going to impact any type of recovery. They did play the economic recovery. They thought the U.S. economy would grow at 2.2%. Now they reduced it to 2%. So they do think there might be a slowdown this year. They do think jobs will improve. They do think unemployment number will keep improved. But there is concerns about the pace of it going, and they're concerned about companies aren't investing into businesses to hire more people, or inventories. So these are things that they're kind of looking at as we're going forward here. Then another topic is oil. It dropped down. So remember, just about a week or two ago, we were up to about $51 a barrel, and then it's come back down to about $47 a barrel right now. So let's take a look here at the bond market, and we did break above. So after the announcement yesterday, we did have a nice rally in the bond market, so we had improvement there. We did close above this resistance level right here, and now we're starting off in the middle here. So we're kind of going this, getting the star effect, which means that we're kind of almost touching to the top here, and could potentially touch the bottom here, and trying to determine, jug its way as to which direction it's going to go. But right now, rates are looking really good. We really haven't been this high up on the chart here, so I would be very cautious if you have any interest rates you're floating right now. I'd be very cautious because we haven't been this high for a while, and potentially could go higher, especially with the Brexit concerns. And this may only last, until after the Brexit, and then things get maybe a little bit normal, or this could just start a trend now. So, but everybody's going to agree that interest rates are going to probably remain low for a while. All right, folks. So we do have an improvement in the interest rates today. As you can see here with the higher placement on the chart here, which gives which bond market when there's more demand drives interest rates lower. So I hope you guys have a wonderful day. Sorry for the long recording here, and thanks for watching. See you guys tomorrow.